Let's bring in our expert on the show this morning, independent market expert Ambareesh Baliga joins us. Mr. Baliga, good morning. Pleasure having you back here with us on News9. First up, help us understand the fascinating data, if I can call it that, which came in that DIIs have outstripped FIIs in Nifty 50 companies. And for the December quarter, DIIs held almost a quarter of Nifty 50 and FIIs held a little lower, 24.3% or so. Overall, do you see this sort of changing dynamics in the Indian stock markets with DIIs really offering that cushion at a time when we saw huge FII exits?
Absolutely. I mean, if you see the last 2 to 3 years data, I mean, we had the DIIs buying all through and FIIs have been selling. DIIs, I mean, have been buying basically because of the sort of, I mean, the funds which have been flowing in from the
Yeah.
retail over the last so many years, especially through SIPs. So they need to invest. And that's the reason we have seen that DIIs percentage holding has moved up quite a lot in the last 2 to 3 years. Whereas FIs, I mean, are I think at a 2 decade low. I mean, their holding in Indian companies is at a two decade low, and this also reduces the risk of FI selling going ahead. But the way I see, I mean, the Indian markets moving, I'm quite sure FIs will have to come back because this is one of those few economies globally which is showing a decent growth. So FIs don't have a choice but to come back. I think the only joker on the pack is the currency. I mean, as soon as we see rupee stabilizing wherever, I mean, whether it's 88 or 89 or 91 or 92, once it stabilizes, you'll have the FIs coming back.
And we are seeing some green shoots in that already in the month of February. Just the first 9 days of February's FIIs have turned net buyers at a value of about 2,645 crore rupees is the reported figure. So they are making that U-turn back towards India. But again, if you compare it to the kind of exits we saw last year, is rupee the only determinant, or are FIIs also likely to look at, even more finer details coming from the India-US trade deal and, of course, clarity on Russian oil?
Exactly. I think, I mean, because of the tariff issues, I mean, we had FIs, especially in the last 6 months, I mean, exiting in a big way. But now with the framework in place, and I mean, clearly there's a roadmap. So I think they should look at coming back. And also, I mean, we have, I mean, seen that clarification as far as energy security and Russian oil also coming in. But then we should always remember that the new risk globally is President Trump, because you never know as to what, I mean, when he can change, I mean, the tariffs overnight. So that's one risk which we need to keep in mind always. But otherwise, I think the road now seems decently smooth. I mean, for a really good bull run, where possibly we could see Nifty, I mean, crossing the earlier highs.
Yeah.
Because, I mean, we have had the budget and the monetary policy is done and dusted. Earnings are getting over in the next few days. So I think the road seems decently smooth.
Okay, the road definitely seems smoother than what it was earlier, Mr. Baliga. But let's look at the stocks in action today. And if you look at the big movers, you don't really find any either on the plus side or on the downside, because I'm looking at the Nifty 50 heat map right now. And it seems that there's no identifiable direction as far as sectors or even stocks for that matter are concerned. You're seeing an equally sort of, handsome shade of green and an equally dark shade of red. So is there a particular sector that you think, investors should be bullish on right now, given that we've already seen the kind of rally in textile stocks and we've seen the rally in the small cap sector as well? But beyond that, is there any identifiable sector that you can sort of put your finger to and say that now that the trade deal is done with, now that the budget is over, now that we've seen pretty much the end of Q3 earnings as well, so we know this is the direction, a sectoral direction that investors should embark upon?
Absolutely. Because, I mean, see, like you rightly said, we have seen an extremely good move in the last few days, because of which possibly I mean, we are witnessing that consolidation happening today. But possibly for the next move, I think one sector which should be looked at, which, I mean, has been ignored over the last 2 to 3 years, is specialty chemicals. And this is where even the US-India trade treaty is going to help in a very big way. So specialty chemicals is one sector which should be invested if you're talking of the next 2 to 3 years going ahead.
All right, specialty chemicals is one sector. What do you make of the auto sector, Mr. Baliga? I beg your pardon. What do you make of the pharma sector? Because pharmaceuticals, generic pharmaceuticals going pretty much tax-free into the US, is there a big buying opportunity, and are there specific stocks in the total pharma pack that you think investors should watch out for?
No, in fact, even when the tariffs were imposed, pharma was one of those few sectors which were untouched. And now with this zero duty, I think it's a big positive for the Indian pharma companies, which have major exports to US. So I think we should be looking at those larger pharma companies which have been, exporting to US in a big way. I mean, Dr. Reddy's, Sun Pharma, Lupin. I think these are the ones to be looked at.
Reddy, Sun Pharma, Lupin are the stocks to look at. I also want to sort of understand from you, sir, the electronics technology and especially, some of the defense stocks which are in it. I'm talking about the likes of HAL, BEL, etc. Given that the defense procurement is technically out of that $500 billion commitment that India has made as far as purchases to the US go. It includes other aircraft, civilian use aircraft and aircraft parts. But if one were to look at the defense space right now, a lot of action when it comes to the Rafale procurement and of course, the Safran MRO already the groundwork for that done in Hyderabad. We are also potentially considering the Su-57 and potentially maybe we can look at some American-made aircraft as well. Overall, how do you see the defense space and stocks like HAL, which now have been pretty much kicked out of the race for developing India's own stealth AMCA aircraft?
Yeah, I mean, if you're talking of HAL as such, yes, I think the recent developments were a bit negative for HAL because they are no longer in that race. And at the same time, what I've been talking for the last 12 to 15 months is that defense companies have got huge orders. I mean, some of them have orders for the next 8 to 10 years. And the markets had discounted the orders because of which we saw most of them becoming multi-baggers. But the big question was execution risk. And we have seen that happening in HAL. We have seen that happening in a couple of other companies. I think the execution risk is what we could see over the next 12 to 15 months. And because of which, I would be cautious at this point of time. Although, I mean, year on year, we'll see the defense budgets going up. I mean, there is no, two questions about it. But like I said, execution risk is something to be watched out for. And the ones which will be hit by that, you could see a similar sort of a movement what we saw in HAL.
Right. And finally, since we are talking sectors, Mr. Baliga, let's also talk about the IT sector, given the fact that we have, the kind of disruption that we saw last week with Anthropic AI's agentic AI, Claude Cowork sort of, hitting the street and the kind of meltdown that we saw in tech stocks globally. A little bit of ripple effect even on the Indian IT stocks. But overall, going ahead, is there a real killer story as far as India's IT stocks are concerned? And if so, what category of IT stocks should investors look at? How should their IT portfolio be split between the large cap, the blue chip companies and maybe the mid cap or the small cap ones?
See, I'll tell you, whatever developments are happening on the AI side would surely disrupt the IT space in the current format. And every disruption, I believe, can take you to the next level. And you'll need to reinvent. And those which are fleet-footed will surely do that. I mean, this will surely affect the routine as well as the lower-end jobs. People will also need to reskill. And surely you'll need lesser headcount for the same job. So in the short term, it would be negative for IT because the world will have tools, whereas you have, the IT companies are quite high on manpower. But once these companies transform, I mean, we could see a leaner and fitter IT companies. I mean, again, if I take you back to the 90s, I mean, there are so many strikes, especially by the PSU banks, that computerization will kill employment.
Yeah,
But in these 3 decades, we have seen the IT industry in India was one of the biggest employers.
that's right.
And that's because some saw the opportunity and capitalized. Uh, so in the short term, there is downside, but in the longer term, those who are willing to transform are able to transform well, I think will surely do extremely well because it's a question of survival.
All
So
right.
investors need to identify those companies which can transform. And I believe most of them would be in the mid cap and the small cap IT space as compared to the large companies because they will find it, I mean, they would be much slower.
All right. So mid-cap and IT and small-cap IT stocks are likely to outperform the large-cap ones, is a word coming in from Mr. Baliga. And what should the investor strategy be? Just buy on dips these mid-cap and small-cap IT stocks, or do an SIP and sort of let the price fluctuations get priced in?
No, I mean, I would say, I mean, buy on this dip. I think we could see a dip at least for the next couple of weeks, if not the next couple of months.
Okay.
Utilize that opportunity to buy into these stocks.
All right. Let's spend a moment more on the AI space, and I want to specifically talk about the IPO in India's first AI company, Fractal Analytics, an enterprise AI analytics company with dual headquarters structure in New York and Mumbai, has kicked off yesterday. So the size of the IPO is about 2,834 crore rupees and issues a combination of fresh as well as OFS, aggregating the total IPO size to about 1,810 crore rupees or so. IPO closes tomorrow, Feb 11th, allotment day after tomorrow, Feb 12th, tentative listing on the 16th of Feb, price band of 857 to 900 rupees and a lot size of 6. Grey market premium, Mr. Baliga, already at about 35 rupees or so per share. What do you make of the Fractal IPO, and is this one of the IT stories, one of the AI-driven IT stories that you think investors should sort of bargain for and participate in?
No, one should keep a track, but then the IPO, I believe, I mean, is at a decent premium to the valuations. So, I mean, I would not suggest to apply for the IPO, but possibly keep a track on the stock over the next couple of quarters and then decide.
So we will leave it at that. You're saying don't apply as yet, sort of watch the numbers clearly, carefully, and then go ahead. Let's leave it at that, Mr. Baliga. Pleasure having you back here with us on News 9. We will, of course, keep coming back to you.